Does that mean there will be no more bull markets and also no more crashes and bear markets, and that we have a steady but upward going growth, which isn't too bad, by the way, because we have been growing from 20,000 to 40,000 and 40,000 to 80,000. So if that trend continues to 160 and 320, not that bad. However, we don't know that. It might be that the bull market is still forming and that the moving average will separate again, will diverge again from the geometric mean.
The cryptocurrency market has been luring investors with the seductive promise of a new era, where Bitcoin sheds its notorious volatility and transitions into a phase of stable, uninterrupted growth. But this narrative reeks of dangerous optimism. The cold, hard truth is that Bitcoin's history is written in cycles of euphoria and despair, and there's no evidence this time will be any different. Bitcoin analyst PlanB warns that the market is heading for a brutal correction, with the inevitable bear phase set to wipe out more than just paper gains. As Bitcoin rises, the larger the crash will be, exposing the illusion that crypto has outgrown its volatile cycles. However, once the dust settles, the market will experience a powerful bull run, setting the stage for explosive growth and a new phase of opportunity. We've seen this story before. The climb from 20,000 to 40,000, then 80,000, feels impressive until you remember that every previous bull run has ended the same way, in a bloodbath. The market's recent consolidation isn't maturity, it's the calm before the storm. Technical indicators like moving averages and the geometric mean aren't signaling safety, they're flashing warning signs. When the divergence comes, as it always does, the correction will be swift and brutal. In crypto, the only certainty is volatility. The bull may still be breathing, but the bear is always lurking and it's hungry. We will now bring you clips from PlanB's Bitcoin April update and analysis. But before we do, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for the support. Enjoy the video.
One more thing on those two lines. Notice that you can't have a bear market, a big crash, when the 200-week moving average and the geometric mean are together. The big crashes here are happening when there's a diversion between the two lines. Also here in 2018, there was a big gap between the two moving averages. Same here in 2014 and 15. In fact, if we look at historical situations where the lines are together, that would be here at the end of 2020. That's when the bull market began. The end of the bull market, the FOMO phase. Same in the beginning of 2017, where the lines were together. So, moving average and geometric mean together could mean the bull market is about to start. The reason for the recent drop in Bitcoin price has nothing to do with Bitcoin at all. It has to do with the general economy and Trump and the tariffs and all the volatility and uncertainty that causes in the markets. So let's look at the stock market and let's look at the big picture, right? The general lines, and I'm looking at 10 years of data here. The S&P 500, the stock market, is on the x-axis and Bitcoin is on the y-axis. It's both on logarithmic scales, of course, because we're looking over long periods and upward trending lines. Now, S&P started in 2015, or it ended actually in 2015 at around 2000, and then 10 years later, it ended in 2024 at 6,000. At the time, Bitcoin in 2015 was 400, and it ended in 2024 at about 100,000. So the S&P general picture of the last 10 years did a 3x from 2000 to 6,000. Bitcoin did a 250x from 400 to 100K. And there's a real clear positive correlation with a very high R squared. So the line that can be fitted is very, the points are very close to that line. It's a very nice fit. And there's this positive correlation. So when the S&P goes up, the stock market goes up, Bitcoin goes up. Is that a bad thing or is that a good thing? Well, it just is. And what we're seeing today, or in 25, sorry, that's the pink dot. We're seeing, of course, the S&P going down from 6,000 to 5,000, and Bitcoin also going down from the 100K to about 80K. So that's that positive correlation again. Both go down, both go up.
Bitcoin's recent price action reveals troubling cracks beneath the surface of this supposed bull market. Bitcoin has been hammered, plummeting by 5% to a terrifying low of $74,425. This is no mere dip. It's a chilling reminder of what's happening to the entire crypto market. Even the smaller tokens like XRP, Solana, and Cardano tried to bounce back, but the recovery is fleeting, with no promise of stability in sight. What happened next? A wild, chaotic roller coaster. Bitcoin briefly surged back to $80,818, fueled by a misleading and quickly debunked rumor that Trump was considering a 90-day tariff pause. It was a moment of false hope. Buyers piled in, only for the news to be exposed as fake news moments later. Ethereum, XRP, and others saw similar spikes, only to come crashing down again. The market is teetering on the brink of disaster. With tariffs pushing the global economy into a corner, investors are bracing for the worst. The crypto bubble, which once seemed untouchable, is now facing a terrifying collapse. This isn't just volatility, it's a full-on crisis, and the worst might be yet to come. The days of runaway gains could be long gone. While PlanB breaks down Bitcoin's on-chain signals, let's shift gears to the broader markets with FundStrat's Tom Lee, one of Wall Street's most vocal bulls. Lee's track record for calling major turning points makes his take especially compelling, and right now, he's zeroing in on a critical date that could flip the script for risk assets. Here's why he believes the current panic might be setting up a major opportunity. Here are clips from Tom's interview.
And again, that's why I get back to, like, I think April 9th is really going to be the more important date. And that's when we start to see breakthroughs, and we'll see how markets react, but I would expect people would be positively reacting to that. And then in terms of like causing stocks to fall, and pushing into bonds, I mean, I think a lot of people definitely can question what is the methodology to what this administration's doing. Like, because I think fairly someone might even say like, well, this seems even harder for us to track, and how are we supposed to be managing money? But I don't know if you caught Trump's remarks before he got on the helicopter today, but he was saying, he wants the stock market to roar again. I don't think he actually wants there to be a stock market crash, especially in response to this. I mean, maybe until April 9th, he doesn't care if markets are anxious. But the reason, he doesn't want that to happen is if we have a recession, the average fiscal stimulus to get us out of a recession historically is 2% of GDP. So, the White House would have to essentially authorize $600 or $700 billion of spending to reverse a recession, which would kind of negate the whole idea of like Doge and fiscal austerity. So I don't think they want. I think they actually want maybe the shock to wear off, and they want maximum negotiating leverage until April 9th. And so maybe they don't care if the stock market is stuck for a couple more days, but I don't think they want the stock market to go down. We put together like a table of like the worst hit groups today, and then the stocks, believe it or not, there's actually like 20 industries that are actually positive today on the day. Okay, but the worst hit are home furnishing retail today, down basically 20%. Consumer electronics down 15%. I think that, like if you look at the stock market reaction today, you'd think that the whole world just got upended, and like we're spiraling into depression. And actually, I'm sure a lot of economists are maybe even saying that that's going to be the case. But these are not. I don't. I think the economies can be fine, and I think that's going to be the message from earnings season. That companies that have good businesses and like moats and visibility, they're on the margin. Probably pulling ahead. I mean, I think there's going to be some companies that look like really superpower companies because they're less affected by this. And then, of course, the ones that are down today, they're the ones that have to rethink their strategy because they do have supply chains that are stranded. I mean, I guess at the end of the day, it is a fact that in the next 3.5 years, it's going to be hard to make shoes in Vietnam cheaply if there's a huge tariff on that. I think it would have been better to see like you know the arms index hit 2, like the trend. Um, but the put call, is elevated. So, some of the right things are happening. Today will be there'll be some positive divergences. So I actually think the technical picture is getting a little better. But one thing to keep in mind is that, since all this turbulence started, Tesla's outperforming by like 15 percentage points, right? So like, let's say you took the March 13th lows and compare it to now, right? So we've like S&P's retested or whatever. Tesla's up like 15%. And Bitcoin's up modestly, and MicroStrategy's up like 16%. So the things that were like leading us down at the start of this year aren't actually taking another leg lower, right? They're actually stabilizing here. So I'd probably say that's to me that's kind of a good sign, right? I mean, even like Palantir is actually outperforming the market today. So, I'm hopeful it's soon. Like, today is definitely a disappointing day. But like I said, the market's kind of just did most of the selling in the morning, and it's been holding this level. I mean, that's not such a bad thing. But I'd say the next point of visibility between now and April 9th is really when the next country makes a deal, right? And maybe it's not until April 9th, but from that point on, I think the investors are going to realize that today was the maximum point of negativity. So yes, I expect some V-shaped recovery, but now the timing is a little bit harder to judge just because we really don't have the Band-Aid completely ripped off until April 9th.
The market's desperate hope for an April 9th turnaround feels increasingly like wishful thinking as the foundations continue to crack beneath investors' feet. While Tom Lee tries to paint today's bloodbath as temporary turbulence, the cold reality suggests something far more sinister is unfolding. The supposed resilience of a handful of meme stocks like Tesla and MicroStrategy, up a meaningless 15% from deeply oversold levels, does nothing to offset the broader market's accelerating decline. Trump's hollow promises of a market revival ring especially false when his administration's policies are directly fueling this crisis, with tariffs and trade wars strangling global supply chains. The brutal truth is that earnings season will likely expose more vulnerabilities than strengths, as companies across sectors grapple with margin compression and demand destruction. Technical indicators aren't showing improving internals, but rather the characteristic patterns of a market in freefall. Elevated put-call ratios and failed bounces that trap hopeful dip buyers. The idea that April 9th will magically resolve these structural issues is fantasy. More likely, it will reveal just how deep the rot goes. Even Bitcoin's so-called stability looks increasingly like distribution before another leg down. The coming weeks may reveal this isn't a V-shaped recovery in waiting, but the early stages of a proper bear market where temporary oversold conditions give way to relentless selling pressure. Investors clinging to the April 9th narrative as their salvation are setting themselves up for brutal disappointment when reality inevitably diverges from Wall Street's hopeful scripts. The smart money isn't looking for a turnaround, it's building cash positions for the coming storm. What do you make of PlanB's Bitcoin price model and Tom Lee's bullish market outlook? Do you think crypto has peaked and we're entering a bear phase, or is a V-shaped recovery on the horizon for 2025 and beyond? Drop your thoughts in the comments. Thanks for watching. Please share this video, remember to subscribe and turn on your notification bell.